Hello and good morning. I'm Edgar Katashabe. This is Traders Next Door, and you're about to hear the Daily Scoop. We have had a very action-packed last 2 weeks when it came to FOMC releases, NFP, CPI, a new election. There is a lot that has been going on, and the markets have been reacting accordingly. So, starting off with inflationary news. CPI this week came out exactly as expected, flat across the board. And this news means that inflation is exactly on track on where we thought it would be. However, we're still off from that 2% target that the Fed set for themselves as to where they wanted inflation to be. The Fed has hinted that they are going to have a potential shift in strategy, and there is speculation that we could see more rate cuts in December and into the new year to help towards that 2% target. The question remains, though, is are these rate cuts going to come at just the right time to avoid an economic downturn while still waving off concerns of a recession and maintaining towards that soft landing they've been wanting? Or are we in a situation where we can't avoid a little bit of downturn, we can't avoid a little bit of recession if we do want inflation to come off to exactly where the Fed wants it? Only time is going to tell. We're going to see what's going to happen at the December FOMC meeting and how things are going to change as Trump takes office. The Fed has hinted that despite who won the election, they had their plan and they were going to stick to it. Powell has gone on the record saying that Trump cannot fire him even if he wants to. So it seems that the Fed is protected and they are going to go according to what their plans are, and they're less concerned about what new President-elect Donald Trump is going to do. But we're going to see exactly what the plan is in store as time draws nearer, but it is going to be very interesting to see how things unfold in this story. Shifting over to the political landscape. In these recent elections, with Donald Trump winning the US election, have sparked considerable discussion about how his new policies are going to affect and shape the economy. If we look at when he comes into office in January, there is likely going to be some major fiscal shifts. There's talk about tax cuts, there's talk about changes to spending priorities, and potentially lighter regulations in certain industries, all of which is going to set a new economic dynamic that we're going to have to deal with. One in particular to watch is going to be what's going to happen with trade policy, particularly when it comes to tariffs. Now, the first Trump administration saw a significant increase in tariffs on important goods, and so this caused a massive ripple effect onto the global economy, not just the US, but this had massive implications elsewhere as well. So this time around, the question is going to be, are we going to see a reintroduction onto these tariffs? Are they going to remain largely what they were before? Or are they going to expand even further now that DT has another 4 years in office? So companies like Apple, for example, are going to have an interesting time ahead of them. They managed to avoid some of the pitfalls of the tariffs during his first administration, but since easing on those restrictions during the Biden administration, they are in a little bit of a trickier situation than they were the last time. So this is going to affect tech companies that have supply chains in China. So it's going to be very interesting to see how these tech companies in the NASDAQ and so on are affected if these tariffs were to be reintroduced. Also, in a broader trend amongst tech companies in general, there is going to be a large drive towards diversifying supply chains away from China and more towards India and other Southeast Asian countries. So this is going to help mitigate risks for them, but it's going to change the global economy in the short term at the very least. There is going to be a little bit of a shakeup. The markets are going to react accordingly. So it's going to be very interesting to see how this is going to affect some of the major and minor currencies. Now, if we shift towards what this is going to mean, experts right now believe there is an overall sense of optimism. They are optimistic about what this means for certain stocks, certain companies, and certain markets. However, this is not going to be a smooth sailing ship. There is going to be a lot of volatility in the market, and it's going to be very interesting to see if all these new policies are going to boost the economy as much as they think it's going to, or if these tariffs are actually going to hinder a little bit of that economic growth, maybe in the short term, maybe into the medium term. So there are some experts who suggest that the financial market future is looking a little bit rocky. There is going to be some turbulence as we go into this transitionary period. The US dollar has been on a massive bull run the last several weeks. We might see a little bit of a pause on that in the interim as things shake up. But the broader economic picture still looks really positive, most experts would suggest, and concerns about changing government are quelled by some experts saying this is a good overall turn for the US dollar and it's going to be good for the overall economy in the US. So if you're looking to trade some of that, betting on the bull run continuing seems to be the consensus of what's going to happen in the US. So it's going to be very interesting to see how all this unfolds. Donald Trump taking office in January, so only 2 months away. And we're going to have another 4 years of MAGA in power. So we're going to see if Donald Trump is going to remain true to his statements of making America great again, or is this going to be a slightly turbulent time for the dollar? Only time will tell, and we will be watching closely. Shifting over to the ultimate trader, we have the latest round of stats. The top 3 has been shaken up a little bit. We do still have Kevin Graff in first place in the funded stage. He has just reached the funded stage, has yet to trade it, 0% on there, but he is well in the lead. Historically, if we look at the first ultimate trader, if he was to stop trading now and just park the bus, he is unlikely to lose that lead by a lot. Maybe shifting down to second, maybe shifting down to third, but the fact that he's in the funded stage is an absolute credit to how good he is as a trader. Was in first place last week, maintained his position. The second and third place has seen a shift. We have Mish Brooks with 2 accounts, both on 0.5% in phase 2. She's doing really well right now. And then we have Kyle Vessels, 0% on phase 2. The top 5 traders, all in phase 2 of the competition, with a few traders just about to pass phase 1. So the top 10 is looking really spicy right now. We will be releasing that on the Vault Funder Instagram page, so be on the lookout for the full top 10 leaderboard on there sometime today, but it is looking absolutely incredible. We are only 2 weeks into the competition thus far. Things are looking spicy. It is not too late to sign up for the Ultimate Trader. We still have 1 or 2 spots left available, but these are going to close very soon. If not by end of today, Monday at the latest. So go ahead and sign up to Vault Funder. Use code TUT to get 30% off and sign up to the Ultimate Trader. Some of the traders have a large lead right now, but about half the traders have already blown at least 1 account thus far. So anything can happen as we head into week 3. Very interesting to see, and it's going to be really interesting to see who by the 14th of December is going to be crowned the ultimate trader. So sign up today and prove what you're worth in the markets with the Ultimate Trader. I've been Ed Katashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.